funny because the way I describe it is we had the analog age of assets, which is kind of up to 80s, maybe early 90s.
Yeah.
Then we went to electronic age, right? And it's really the electronic age is electronic assets, kind of in air quotes, but it's just representing the physical assets.
Yeah.
Now what you're describing is digital native assets.
Yeah.
Right?
Yeah.
It's kind
That's
of
right.
The actual asset itself is digital.
Right.
There's no physical representation.
Totally. Yeah. I mean, what most people don't feel, or what most people don't realize is that the U.S. dollar is an Oracle database running on a Sun Solaris machine in a server at the Fed. That is the U.S. dollar. The U.S. dollar is a SQL database. Mm-hmm. The record is a SQL database. And payments are basically, comma delimited text files that are pushed around on FTP servers, on secure FTP servers. That's what ACH is. That's what SWIFT is. So the quote unquote electronic money system is an arcane system that is decades and decades old. It's not modern. It's not secure. Mm-hmm. And it's certainly not open and permissionless, which is obviously part of it. And so there has been the introduction of software into the financial system, but money itself is not digital. Until crypto, you don't actually have truly digital money, where the asset can become a bearer instrument, and it is not possible to copy. Right? This is the innovation of the preventing double spending. Is digital artifacts are incredibly powerful. MP3s were an incredibly powerful digital artifact because you could copy it. The same song could instantly be everywhere for free. Mm-hmm. But with money, you don't want that. You don't want the same dollar to instantly be everywhere for free. So, that was a huge part of the crypto breakthrough, is by applied cryptography, peer-to-peer networking, and of course, fundamentally, these very, very brilliant incentive structures. We now have money that is truly digital, and that is not in a SQL database. It's on a blockchain.
Do you feel like so go back to the U.S. dollar example, I think the way you articulate it's interesting, because basically what you're saying is, look, this is old technology, right? And just like every other piece of technology you use, you want the latest and greatest, right? And that technology is not the latest and greatest of what it could be. Do you feel like there's risk in kind of that central database, specifically around money, right? I think a lot of people talk about it from, there's centralized companies, they have your user data, all of those types of things. But around money specifically, is there more, less, maybe the same amount of risk as, let's say, user data in a centralized server environment? How do you kind of think about that?
Yeah, I mean, it's interesting on a number of levels. I guess, digital bearer instruments are a new phenomenon. We had bearer instruments in the past, but now we have these digital bearer instruments, and they're more powerful than the past, right? A digital bearer instrument, there's a much higher threshold of security risk around those. Hence the huge growth in criminal attacks on people who have crypto assets, for example. These bearer instruments can move at the speed of the internet. They can move intergalactically. They have some attributes that old bearer instruments did not. So it does create a different set of risks and security risks that are quite different than a centralized money system. I think it does raise the question, and this is where I think there's a need for this infrastructure and these assets, for many of them, to be truly decentralized, where you can, in a self-sovereign manner, control it. But society will also demand, and does demand, that there are trusted intermediaries as well. And so I think companies like Circle, companies like Coinbase, I think are in that hybrid world, right? Mm-hmm. Where we're licensed and regulated. We behave more like banks in some cases, but we're allowing people to interact with the open permissionless internet as well. And so trying to find that balance. And if people want to be their own bank, and they want to take those digital assets and move them to a hardware device, move them to a brain wallet, move them to another venue, they have the freedom to do that. So that freedom's really, really key and important. But there is still this role for intermediaries, we think, as well. And governments will ultimately require that as well.
Yeah, and part of it is the more technical you are, the less that you may think you need something like that. But the vast majority of people on this planet are not technical. They definitely need, great user experiences, great interfaces, great kind of intermediaries, right? All of those things actually increase the adoption and increase the functionality for, again, I don't know, 4, 5, 6 billion people who don't know how to write any sort of software code.
Yeah.
And I think in this world specifically where it used to be, I think of it as like the internet, you had to understand networking, right? And you could connect to the internet.
Right.
And so you got to be somewhat technical, but it was networking.
Yeah.
Now it's much more software-based skills, right? And so if you don't have that, you need something to use. And I think that there's a lot of companies that are trying to step in. Obviously, Circle's done a great job doing that. But it's not only needed from like a regulation standpoint, it actually increases the value for everyone else, right? We want to get as many people onboarded to the quote-unquote network as possible.
Absolutely, yeah. So I think that's really part of the challenge going forward is, people talk about, like, where's the killer app? There's lots of killer apps, right? Obviously, self-sovereign money, non-sovereign digital money. That's a pretty killer app, and it's really valuable to a lot of people. I was just reading an article today. It was a story out of Venezuela, and I think it might have been from this New York Times piece that came out recently. But there's a guy who got his wealth into Bitcoin, and he was fleeing Venezuela for Colombia, and he was like, I don't want to take the risk of having a USB disk. I don't want to take the risk of having a paper wallet. So he used a brain wallet. He memorized his seed phrase, and he walked across the border, and he brought all of his wealth with him with a seed phrase in his brain. Like, that's awesome. That's incredible. That is incredible. And that is human freedom. And that's tremendous. And that we have to preserve that. But like you said, that's not, your average person is not going to memorize their seed phrase.
They can't remember their password to Gmail.
I think they need the option for that, and so I think the key is, when people think about killer apps is whether it's sort of storing value or making payments or seamlessly investing in some investment contract that happens to be a smart contract or entering into an economic relationship that's mediated by smart contracts. All of those things have to become as easy as search or Gmail or your mobile messaging apps, or they just have to be that easy and trustworthy at the same time, and need to give people the freedom to have complete freedom as well. And so that's I think the balance that we need to find. I think that's the balance that we're trying to strike with products that we're working on now, is to be able to kind of work across those spectrums. But like, crypto isn't useful for payments today. It's useful in some cases, and there are some what I'd characterize as mostly niche use cases today. And it isn't so much that it's about scalability or cost. Like, if only we had Lightning Network, everyone would make payments in Bitcoin. I don't believe that. I think Lightning's useful as a layer 2 technology for a lot of things, but I don't think it's going to drive like mass payment adoption. You need fiat stablecoins or stablecoins more broadly, and you need the user experience of kind of funding those, taking funds out of those, spending those, using those, not require that you have MetaMask and know how to pay gas fees to a smart contract, which is just simply inconceivable for the average person, right? So there's just like a threshold of usability that needs to exist. And again, we're very, very close on some of these things. And I hope that Circle can be a company to help solve some of those, along with a lot of others in the industry. But we're getting there.
Yeah, I want to go back to the early days of Circle, because I think what a lot of people know you for today is not actually how you got started. right? And so maybe talk a little bit about the first product you guys built and the evolution to, this kind of multi-strategy or multi-product company today.
Yeah, absolutely. I'll go through that narrative. So, the first thing that we built was we knew we wanted to build a kind of new type of kind of almost like global bank. So the first thing that we built was a platform. So we built platform infrastructure that we built a transaction banking system. We built an identity and risk system. And we built a settlement system that could seamlessly move between the legacy banking system and crypto rails. And that was really key because the first product that we wanted to create was a payment product. And we wanted to create a way where people could use fiat currency with any bank account in the US and Europe, which was the initial target, and seamlessly move fiat value over the Bitcoin network. And our concept was that we would use Bitcoin as a settlement network, and we would essentially marshal or move fiat in and out of that very quickly. And so that was actually the first product that we built, and it worked. It absolutely worked, and actually people who wanted to use Bitcoin really loved it because it actually turned into one of the cheapest, fastest ways to get Bitcoin. But there were challenges with it, which is that Bitcoin as a settlement rail had a lot of issues. Transaction time, the number of confirmations, volatility, and volatility continued to be significant, and cost. I mean, the transaction fees tended to get so slow, expensive, and price volatile. So as a intermediate kind of settlement currency and settlement network, it didn't work. As an open network, it was great. So the idea was that our digital wallet would work with any other digital wallet because we were all speaking the Bitcoin protocol. So there were challenges with what we built. And I think one of the challenges was we wanted to have this incredibly fast, seamless experience where you could just connect any debit card and with very little information just instantly be transacting with this. And that was really attractive to fraudsters, really attractive to cyber criminals, and I think was very challenging for our banking partners and our card scheme partners, who, I think it was running up against the limits of what they were comfortable with. So we put a pause on using the Bitcoin network and began work at the time on something called Spark, which became US Dollar Coin. And I'll come back to that. But one of the things that happened in the interim was in order to create that Circle Pay, that product, we built a treasury and trading operation where we managed real-time liquidity between fiat and crypto. And so we built out this kind of both automated trading engine, and then as the customer demand grew, a desk where we kind of source liquidity to handle all this customer volume. So we ended up building one of the most efficient, connected trading platforms for Bitcoin. And so starting in 2014, that started to grow. 2015, it continued to grow. 2016, it really started to grow. And by 2017, was a huge business. And so our second product is Circle Trade, which is our market making and OTC service, emerged out of the infrastructure that we built for payments. And its original design was to support that payments infrastructure. And then we saw okay, this is actually a great service in and of itself. So we really allowed that to grow. And then in the summer of 2017, obviously during this sort of dramatic growth in ICOs and so on, we, like I think others, became very, very excited about tokenization. And we thought, we very much thought that in the coming years that, tokenized economic contracts, tokenized financial contracts would become a much, much bigger thing. And we were seeing kind of in the crypto exchange market, kind of the early examples of what a token marketplace could be. And so we got to know the Poloniex founders really well because they were a client of ours with Circle Trade.
Makes sense.
And they happened to be from Boston. We were in Boston, so we spent more time together, and it became pretty clear that they needed help. The business was growing extremely fast, and they needed help with technology, operations, support, compliance, risk, regulatory, you name it. Like it was a very small team, and they did not have a lot of experience like scaling out things. So from our perspective, Poloniex was actually a really great company because they were at the forefront of working with developers who were launching new projects and helping create the markets for those. And that kind of being a marketplace where you're bringing these kinds of new tokenized projects into the market was a really unique early position. And our long-term vision is we think there's going to be mass proliferation in tokenized assets. We think there's going to be, far, far greater numbers of stablecoins with multiple currencies. We think there's going to be, multiple significant store of value, privacy-focused digital currencies. We think there's going to be proliferation in utility tokens that are used to power crypto networks and crypto apps. So going from, maybe dozens of meaningful utility tokens today to thousands. And then last but not least, we're very big believers in the idea that financial contracts, equity-like, debt-like, property-like financial contracts will be tokenized. And we believe there'll be very large multi-sided markets that are similar to internet markets we have for other things to enable people to issue those and enable people to exchange those. And so for us, acquiring Poloniex was not just, hey, let's acquire this exchange that has all these people trading digital currencies. This is a foundation and a building block to a much bigger long-term vision. Mm-hmm. And so we've now kind of completed, roughly a year of transforming the infrastructure to be ready for this broader vision that we have, providing, much stronger kind of security protocols, our own custody infrastructure for it, de-risking the platform, and putting in place a framework for curating the markets, selecting projects to launch, and have now really started to do that much more proactively.
One question I have about Poloniex, and I think everyone talks about the technology in crypto and is very focused on what I'll call like more hard skill type stuff. But there's some soft skill stuff that a lot of these companies in 2017 suffered from pretty drastically, right? So customer support, the regulation type stuff. And some of it, I think, is any company that goes from very small number of customers to a lot. Mm-hmm. There's just, you got to hire people. You got, there's those types of like scaling issues. And then some of it is even if you have all the people, you still have to know what to do, how to do it, right? The things to focus on, not focus on, et cetera. I think Poloniex, when you guys made the acquisition, the general sentiment was, oh, wow, here's a group of entrepreneurs that have success building internet companies, have scaled things, have taken them public. There was a lot of people who liked the technology and the exchange, and they felt like this was a great merging of, that technology, and it had some issues right around support and all that, but you guys were going to be able to help really kind of do that. And it was pretty quick. You could see the sentiment of people saying, wow, like it's actually getting better. Right. And obviously I think that you guys did a bunch of stuff in the background. Do you think that there are a bunch of other companies that suffered from that in 2017 where they would be unable to do that themselves and they're going to need these big, kind of, I'll call it the crypto incumbents to step in and really help with that? Yeah. Or do you think that this is something where they just need a lot more time and even money, and they'll be able to build it out, and if there's another bull run like we saw, they'll be ready for that? Like, do you think that consolidation is essential, or do you think that we can stay with some kind of fragmentation and let those young companies really kind of grow into their own?
Yeah, I think it's very much both.
Okay.
I think it depends on the specific problem space, but I mean, the beautiful thing about software and entrepreneurship is, there's just this constant kind of fount of new idea creation and development, and the kind of laboratories where that happens aren't always in large companies. Mm-hmm. I think the internet and cloud software and, open source and distributed development, all of these things make, innovation easier in some ways, and faster, and can move at a greater velocity. I think there's going to be a lot of projects that will grow and scale, and they don't have to be consolidated, et cetera. I think there are others that will need to be consolidated, and there's plenty that are just going to peter out, which is very natural.
It's fine.
So I don't think it's an either or something like that. It'll be interesting to see over the next few years, in particular in the kind of the markets space, as the market space very likely does require more regulatory capability and the opportunities to kind of do regulatory arbitrage get smaller and smaller. I think that will force a lot of players out or to be consolidated. But that'll take some time.
Yeah. I tend to agree with you on this idea that every stock, bond, currency, and commodity is going to get digitized or tokenized over time. One thing that you guys did after you moved from the Bitcoin rails and the ability to kind of transact money was you created a stablecoin, right?
Yes.
So maybe talk a little bit about kind of the thought process to create your own, how you thought about actually keeping it stable, right? Because there's a bunch of different options there.
Yeah.
And then what you guys are doing with it today.
Sure. So kind of going back to the first thing that we worked on, which was how do we take fiat money and use public blockchains as the settlement infrastructure for fiat money. That was the problem we wanted to solve. And our belief back then was that if you could do that in a standardized way, then digital wallets everywhere in the world could just be interoperable with each other, and it would be more like the web or email. We'd have this sort of this seamless ability to transact with people instantly, but still with the price stable value of their everyday currency, right? So that was what we originally set out to do. Our view back then and our view still now is that there have to be actual open technical standards that people can follow. There has to be a protocol and a set of standards that people can contribute to that are open for that purpose. And so we began work. We started work on the technology for stablecoins as early as early 2017, and then in late 2017 we announced that we were forming a project called Center, which was going to be an open standard and an open source implementation of a kind of fiat payment model. Not a lot of people paid too much attention at the time, but then in the summer we announced the kind of first milestone of Center, which was the first implementation, which is a US dollar token and the US dollar coin. Now, Center was created as a membership-based consortium. So it's not Circle, it's not Coinbase, it's Center. And Center exists to define the technical standards for fiat money on the internet, to define the self-governance framework for people who become issuers of that fiat token. And that's really important that there's a set of standards. It's almost like a self-regulatory framework for companies that are going to issue these. And the key is that this is a protocol where the issued tokens are fungible, right? I want to be able to use my US dollar coin. If I got it from Circle, I want to be able to redeem it with Coinbase or redeem it with another issuer. And so this is really key, is that you that interoperability and fungibility, especially with money, is really core. So we've taken that approach, which is very unique. And now Circle and Coinbase are launched, as issuers, and we're taking a big step towards that. So the concrete details are, US dollar coin is a asset-backed, fiat asset-backed stablecoin. Customers can, from 80 countries, send funds from a bank account, and they'll be tokenized into US dollar coins. We hold 100% of the funds that they've sent to us in reserve. So it's a one-to-one asset-backed token. And we prove that every month. one of the largest auditing firms in the world, Grant Thornton, does a monthly published attestation. They review all of the bank accounts, and they review the issued and in circulation tokens, and they publish that attestation. And it's grown very fast. So it is now, I think, a really powerful way to move value on and off of the blockchain, and it has great liquidity. You can redeem it at any time for $1, which is the whole point. So it actually is redeemable. You're not like worrying about some weird opaque offshore bank accounts that are always changing, or sometimes you can get redemption or sometimes you can't, or it's really straightforward, very transparent, and you can use it. And because it's an ERC20 token, it's got incredible compatibility already. So I think like 120 companies or some huge number of companies already support it. Wallets, exchanges, custodians, a lot of the DeFi companies that are out there are using it as their US dollar mechanism, whether as a collateral mechanism or paying it out in loans. And so it's really become very, very useful. And it's now, I think, within the market making community, considered sort of best in class as a way to move dollar value around, because they can it's actually liquid, So it's been a very good early success, and I think we have a lot of ideas for where it can go.
And so I recently wrote in this piece I was talking about J.P. Morgan. They just announced this new JPM coin. They've basically come out and said, look, we're going to use it internally. They're not the first. I think Silvergate Bank's been moving money around internally on a blockchain. HSBC's been moving money around on their own internal blockchain. They said, I think they moved like $250 billion last year doing this. One of the things that I wrote about, and to me the concern is much more with the incumbent Wall Street banks, is they come out and they say, okay, I have a fiat-backed digital currency, right? So the US dollar, JPM coin. They use it internally, then they get institutional adoption with peers and with clients. They then push into retail and people start using it there. And then at some point, they, very similar to in 1971 with the US dollar, they basically say, we're actually going to break the peg, right? We are going to come off of that US dollar backing. And essentially what they do at that point is they become a central bank, right? They can print at will the JPM coin. And it feels like that's a really dangerous thing.
So I don't know. I mean, that scenario I don't think is likely.
Okay, this is what I want to talk about. It's like talk me through
the reason
probable,
is that,
not probable,
is
etc.
They're a Federal Reserve regulated bank, and there's reserve requirements, and there's Basel III, which is a global standards for the health of a balance sheet and what amount of leverage. All banks, their core business model is creating money. That's what they do.
Yep.
Money's not created by central banks. Money's created by banks. And
I love that.
yeah, I mean, that's what they do. They get a deposit, and then they create 10 more units, or whatever the ratio is, from that one deposit. They create money based on a deposit that they have, with the hope, with the risk that the people who they've given that money to on credit will ultimately pay them back, right? So it's a leverage business, and it's a money creation business. That's the very core of what banking is. So would a JPM want to be able to do fractional reserve? Of course, because that's their core business model. I mean, that's the very essence of banking. So that's not so much breaking the peg. That's just doing their business. I think they would not be permitted to go beyond the reserve requirements that they have as a bank.
That's an interesting
under the
way to
supervision
look at it.
of the federal government, and under supranational schemes like Basel, which basically governments have signed on to in a legislative capacity, and those are the reserve requirements that exist for banks everywhere. So, that's the law, and so I don't see them going outside of that. It does raise the question of at what point are things like asset-backed or fiat-backed stablecoins fractional. If I'm a bank and I'm issuing a stablecoin token, I absolutely want to be able to do it on a fractional reserve basis, because that's what I do for a living.
Yeah, that's really interesting. I think the example I gave is probably the extreme, right, where you just completely break. What you're describing is there is probably going to be some, ability for them to do it on a fractional reserve basis up to a limit that is governed in some way. Do you see issues with the fractional reserve side? And I frankly haven't thought about it enough to have an opinion here, where it's a pretty well understood business model that we've kind of seen what some of the risks are, how that plays out in traditional fractional reserve scenarios. Somebody deposits money, right, and they lend it out. When you get to this asset-backed digital currency, like if there's a fractional reserve mechanism there, do you foresee that being problematic? Do you think that it fits very similar to the traditional business? Right? How do you look at that?
Yeah, it's an interesting one. I mean, I think one of the potentially attractive things about central bank digital currency is the possibility that the central bank has in a sense better visibility into the underlying health of the financial institutions. So if you take the financial crisis as an example, the bank regulators, they had no idea what were in these balance sheets, right? The quote unquote integrity of the balance sheets and whether or not they were, healthfully leveraged or leveraged according to the kind of safety and soundness requirements. They didn't know, and the banks didn't know either. And so the theoretical question would be, if fiat money, if credit, if derivatives, if securities were all, digital tokens and mediated by smart contracts and blockchains, could regulators have dramatically more visibility into the health of the economy and the health of any given financial intermediary? And in theory, they could. Now, there's sort of privacy questions, and there's sort of ways that you'd have to think about these are, people talk about proof of reserves with crypto balances. Well, you can imagine if your full stack of the financial system is built with crypto assets and blockchains, and that takes on a whole new meaning. So I think that it actually, in some ways, crypto assets, tokenized fiat, things like this have the potential to not only support the existing model for banking, but also make it significantly safer and safer to monitor from a risk perspective. So I think. I was actually just with a giant global auditing firm, and they're really passionate about public blockchains and the idea that as more and more, even like corporate treasuries, move to tokenized assets, then it could really transform the way in which you can audit, right?
I mean, look, a blockchain is basically just a new accounting mechanism, right? And it's for the digital world. That's the way I look at it. And so if you are an accountant or you are an audit firm and you can figure out how to leverage this, it should give you a significant advantage over what you do today.
For sure, yeah. One of the things I wanted to maybe ladder off that on and talk about is, people talk a lot about security tokens, and we're very interested in that as well, as with the acquisition that we've done. And I think, what's interesting to me is the straightforward thing would be to say, hey, I've got some Delaware shares. Can I tokenize those? And now they're shares on the blockchain, or they're tokenized shares, et cetera. And I think there's good reasons to do that. I think that there's a whole bunch of benefits you get from that. But the more interesting question is what is a natively digital corporation? And what does it mean to have the voting, the governance, the corporate treasury all be based on crypto assets and all be intermediated by tokenized contracts? And it becomes possible to think about the governance, the voting, the ownership, the treasury functions, which then in turn has to do with everything from payroll to how you interact with businesses. And so a lot of the building blocks for building an entirely digitally native corporation that's all built on public chains is emerging. And that's what's interesting to me, is not so much like how do I create a a Delaware C corp that has you take the jurisprudence of Delaware and you put some thin layer of that into a smart contract. Again, I think that's really powerful and interesting. The long term, though, is, there's obviously platforms like Aragon, which are really trying to push this of these decentralized autonomous organizations and trying to build those functions entirely in that way. And I think we're probably a ways off from that being something that a global auditing firm would say, yeah, we get that. But I think when we think about the real disruptive potential, it's that microeconomic organizations, the microeconomic units of organization could be entirely run in software and be inherently automatically global and have economic relationships that are inherently automatically global. And that's extremely powerful. And certainly where we'd like to see things.
What you're talking about here, there's a gentleman who previously gave me this example, and I thought it perfectly articulated it. It was the publishers when they first saw the internet, right? So take a newspaper publisher. They see the internet and they say, oh my God, I can now take my physical paper.
Sure.
I can basically scan it onto the internet, and there's a website, and anyone in the world can go read the newspaper. I don't have to give them a physical copy.
It's the PDF version.
Yeah. And everyone was super excited about that. And there's value, right? Yeah. Look, you can absolutely give it to more people and all that stuff. But it missed out on the ability to do dynamic headlines, update articles, distribution, all these things that we now know as digital media.
Yeah.
It took a while for people to understand, here's what this internet thing can do and how to actually leverage it.
Yeah.
What you're describing is almost exactly the same, right?
Yeah.
The kind of initial ideas around tokenized securities is take what we have, put it on a blockchain, right? And there's value, right?
Yeah.
It just doesn't tap into the full potential.
Absolutely, yeah.
And I think that you guys recently announced last year that you were the intention to acquire Seed Invest. You've now closed that. So one, congratulations.
Thank you.
But two, maybe just talk a little bit about why do you go do that, and two, how do you see their platform kind of positioning you well for that world that you just described?
Yeah, absolutely, very related. So. In our vision, we believe that more and more, businesses are going to be able to, directly raise capital on the internet and raise capital from Main Street investors, from institutional investors, from investors all around the world, and that the capital assets that they raise will be increasingly become more liquid and tradable. And that there's a tremendous opportunity to transform capital formation and private capital markets more broadly. So we think what's happening with crypto is part of that. In a lot of people's minds, they're sort of like, oh, there's this weird cryptocurrency trading thing over here, and then there's like the stock market over here. We actually see a lot of convergence. But right now, today, there is no global marketplace for private capital, for private financial contracts. Doesn't exist. And I would sort of have you think about it similar to the retail world or the media world or the publishing world pre-internet, right? Mm-hmm. In the retail world, like you had to have pretty good scale to be able to have distribution and to reach a lot of people with your product. Mm-hmm. It was hard, but platforms like eBay and then the Amazon marketplace, the Alibaba marketplace, just as examples, made it possible for anyone who's creating any product anywhere in the world to reach anyone. And they were commerce platforms, logistics platforms. It just blew it open, and the model of centralization in retail was kind of torn down. I think the same thing with advertising, right? If you were someone who gave tennis lessons in a city or whatever it was inconceivable for you to be able to run targeted advertising that would reach exactly the right people, and they could be from anywhere in the world. And AdWords created a massive, efficient global market for advertising. And you see this in other areas, in publishing and content, in video. We're participating in that right now with this podcast in terms of radio. And I think the same thing is very much possible for entrepreneurs and for people building businesses. And by that, I don't just mean like your classic like tech startup that might do like seed VC type money. I'm talking about someone who's a landowner in an emerging market that has yield from their land, and they have no way to securitize that and participate in a global capital market. It's impossible, but it should be possible. Just like the person that, makes, plastic, things or makes custom scarves in Bangladesh can sell on Alibaba and reach a global audience. It should be possible for the financial contracts that help businesses grow, and even individuals over time. When you think about the tokenized, future value of labor or other things, it should become possible for that to be expressed in a digital form, to be discoverable and distributable through global marketplace, and to make the economic actors be able to participate more freely in that. So that's what we think becomes possible. Seed Invest is a great addition to the Circle family. We're really excited to have Ryan and James and the team there joining us. For folks that aren't familiar, they really were at the forefront of creating ways for businesses to raise capital directly on the internet using equity and crowdfunding models. They helped put together the Jobs Act. They helped get it through Congress. They helped FINRA and the SEC as the exemptions got defined for that, and they were among the very first companies to be launching, direct internet fundraising models for businesses. They've got a nice business that grew, very nicely last year. Is profitable, and it really gives us a great capability. So they have a service where if you're a startup and you want to raise capital, you can go through their platform and they will underwrite your capital raise. They'll do an offering that can be managed with both accredited investors and unaccredited investors and international investors. They handle all of the investment marketing. They handle the fulfillment, the payment, the getting the securities held. They have a custody model for those securities, and they've really created this kind of capital formation engine, and they've got kind of an end-to-end service for that. That fits really nicely with what we see as the future of finance, right? This democratization of finance. How can more and more companies go digitally native, issue securities directly on the internet from a broad range of investors, and ultimately also have the secondary markets for those as well. So Seed Invest really, really helps us march towards that vision. The kind of digital security piece of this, or the security token piece of this, that piece, as you know, is more nascent. There are experiments in it. I know you guys have been involved in some of those. And frankly, the SEC is still getting their head wrapped around this. And so there aren't like a whole bunch of registered security tokens that are out there. It's still, I think there's a lot of heavy lifting to ultimately get to standards and a kind of agreement with regulators on how that's all going to work. We'll be right there working with them to make sure it works and is feasible from a technology perspective and ultimately from a market perspective. But that's sort of the next big heavy lift, is to really, really make sure that things like the Jobs Act and the benefits of raising capital over the internet can also get the benefits of cryptocurrency technology, blockchains, digital securities. Because I think, it's interesting because Jay Clayton, he's really passionate about how do we make private capital markets more open? How do we allow growing businesses better access to capital? How do we let Main Street investors participate in that? How do we open up private capital markets, which globally is massive and it needs to be transformed. And I think it actually ends up that, crypto assets and blockchains are the way that we're going to do it. So I just don't think Jay's realized that yet.
Do you think an aspect of this that took me a long time to wrap my head around, but now I have started to gain confidence in, I just don't know when it happens or if the regulators are thinking about this yet. One of the promises of all this digital securities, blockchain, et cetera, is that you could write the law or the regulations into the code, right? And so the general thesis here is, if I'm the SEC today, you and I do something that is breaks the regulation, they've got to come figure out who we are, what we did. They build a case, they spend millions of dollars, right? 1 or 2 years, then they enforce on us. And so they're very reactive to us doing something that is or outside the regulations. If the code is written into the law and you and I try to do something that we might not even mean to do, something that breaks the regulation, the code could actually stop the transaction, right? And turn a regulator into a proactive player in the marketplace. One is there's a bunch of technical stuff that still needs to be figured out. Yeah. Two, I think, is would that hold up in a court of law? And there's all that kind of stuff that goes into it. But I'm more interested in the regulator's perspective, right? I think that technologists generally believe in this macro trend of automation and kind of efficiency gain from technology. I just don't have insight into the regulator's approach to that type of stuff, right? And so we see them, I think public comments are very encouraging of, we want to encourage innovation, we want to open private markets. Do you think that they've gotten that far yet, or kind of any insights there as to how you think they maybe should be thinking about this idea of writing the law into the code?
Yeah. I mean, I certainly think that there's discussions happening around some of those topics. It's not a coincidence that in the past 5 years, the concept of regtech has emerged as a thing. And
That's
there's
fair.
like regtech startups, and they're all trying to sell tech to regulators to help with automation and or to help companies who comply with regulations. And it used to be like compliance was like a software category, but regtech is a category. And I think there's something there, obviously. I think, but this issue of, essentially writing the law into the code, I think that's real. I think it's gonna be very incremental, right? We're gonna start with, effectively like the share certificate number and the accreditation, investor ID, transfer restrictions, like this thin
KYC AML, something super simple.
This sort of shim on top of it. But the real security is like, let's actually take a look at those governance docs and take a look at what requires votes and what are the votes and what are the bylaws and what are the classes of stock and what are all of the mechanisms that exist to protect preferred investors versus common and all these kind of provisions. And, those things will take a lot longer to actually get into code. And ultimately, it's only beneficial if they're recognized, if those things are recognized by a court. And so in some ways, this isn't, I think, going to come down on high where all of a sudden, the SEC or someone says, yeah, you can have all of the terms of a security written in code. It's going to come from case law. It's going to come from an issue coming up with a company and a court saying this is allowable, or it's going to come from states passing laws like Delaware did originally, just to say you could keep your cap table records on a blockchain, but it'll be states, because ultimately these corporations are domiciled in states or in countries, as it were, passing laws that basically say that, for example, a vote on a change of control could be effectuated using votes conducted on a blockchain using tokens that have been issued to these sort of shareholders, and that's okay, that counts. Just like, a DocuSign now counts.
For sure.
So I think some of that will come through kind of case law and things like that.
How does some of this stuff change on the regulation, licensing, and legal front when it becomes decentralized? So decentralized organizations, decentralized exchanges.
Yeah.
What's kind of your thoughts there around some of that?
Yeah, I mean, it's one of the most fascinating dimensions to all of this is, in a world where you as an economic actor choose to interact entirely with a code-based organization, you have the free will to do that, and so long as you understand that is what you're interacting with. I think it'll be interesting to see whether some governments at some point sort of assert themselves, saying, well, if you're an individual or you're a business and you're interacting with one of these things, here's your obligations or here's our rights. I haven't seen that happening yet. But I think, my general take on a lot of this stuff is that, the internet has shattered existing regulatory frameworks for decades, and people probably forget that if you wanted to broadcast an audio conversation to someone in Italy, you needed a license from the Italian government. Mm-hmm. Well, the internet came, and guess what? We can all broadcast to everyone everywhere, and we don't need a license. And so, in a sense, when these decentralized infrastructures reach scale, generally speaking, people like it. It's better. It's a better world. And I think in a world of decentralized finance, people and businesses are going to say, we like this. This is a better world. And it gives us more control. It's less expensive. We can move faster. We get all these, rent seekers dissipate, and we get more value. And I think, when billions of people are going to be able to interact with each other and with through economic contracts seamlessly over the internet, no one's going to want to go back. Mm-hmm. And so I think that is just going to require governments to adapt. Mm-hmm. And that's not to say that there aren't still going to be obligations around protecting consumers or obligations around money laundering, or these are important kind of social contracts that exist. Mm-hmm. But the way that those that take shape may really change. So I think with some of these things like decentralized autonomous organizations, there will be some DAOs that come along that become really big and successful and potentially have the equivalent of tens of thousands of quote unquote employees, but who have only an interaction with a smart contract and who are generating income. Mm-hmm. And maybe the income is still taxable and reportable in their home jurisdiction, but the software is just a piece of software. Is that a corporation? No.
Well, so it's kind of like the Bitcoin network, right?
Totally.
With miners. Like if you think about it, there's no company that's paying them.
Absolutely.
It's just an algorithm that's governing these resources.
I think so. I mean, I think crypto networks that are effectively DAOs in a sense, it's just a new form of human social and technological organization. Mm-hmm. It hasn't existed before. It exists now. It's very powerful. Those will grow. There'll be more and more of them. They'll be very, very big, and that's positive. Like that's positive for society and humanity. And again, I think ultimately, when things become really positive, it's hard for governments to take them away from people. It'd be very, very hard for governments to say, we're taking away the internet, right? Even countries that have, censorship on the internet or that filter for things, they still, they're not taking away the internet because the internet is so powerful. That would be just like such a monumental step backwards for any given society.
Well, and the part that's always been so interesting to me is take, Bitcoin, for example. There would be a rational argument you could make that, hey, if this decentralized digital currency becomes the global reserve currency, there would be material impact on a number of countries around the world, mm-hmm. right? And there would be reason to believe that they wouldn't want that to happen, right? There's no CEO. There's no headquarters to go. You know what I mean?
Right,
it's this decentralized thing. And so not only can they, will they not take it away because of the power and all that stuff, but even if they said, we want to take it away, they would have a really hard time kind of putting the genie back in the bottle. And that's not to say the kind of anarchist view, screw the government. It's just more of what happens when that's a corporation, right? What happens when that's something else? You get into a world that, again, it's just a lot to think about, and we haven't seen it before.
Yeah. I mean, I think some of the most ambitious projects are, decentralized algorithmic stablecoins, and again, none of them have really taken hold and gotten scale, but clearly there will be some, and that even have a pegging mechanism to a basket of fiat currencies. So you could imagine a global digital currency unit that's algorithmically pegged to the major economies of the world, which runs entirely decentralized and kind of has its own internal market structure to it that is just code that allows anyone to have a stable global digital currency that's instantly convertible into any fiat currency. That is absolutely on the horizon, and really, really powerful, and more powerful than, say, a Bitcoin in my view, because
why is that?
Well, because everyday transactions, people need a price stable asset, and so I think if you're looking at like a hedging asset or a long-term store of value asset, Bitcoin is very attractive. Mm-hmm. But for everyday economic activity, you really need price stable assets mm-hmm. that are really tied to stable economies and the currencies of stable economies. Mm-hmm. That's how we're going to transact. That's when we decide to enter into a 3-year bond contract with someone. It's going to have to be denominated in price stable assets. Mm-hmm. It'd be insane otherwise. You can't price risk. You can't price credit. You really can't do anything. Mm-hmm. So either something like Bitcoin gets so broadly adopted that it's price stable, which I think by design, I think we're probably decades and decades away from that.
Mm-hmm. Yeah, it's really interesting to think through. Some of these solutions are short-term, medium-term, and long-term solutions. And, I always talk about Venezuela, for example. Sure. A lot of people always say, that's where Bitcoin's taking hold. And there's data that suggests that there are plenty of people who are running to Bitcoin. But if you're a Venezuelan and you want to walk across the border, like the example you gave earlier, and all you want to do is preserve your wealth, right? You're not looking for an investment opportunity. Right. You're just saying, listen, I don't want to lose money. Owning U.S. dollars would be a great option.
So things like U.S. dollar coin
exactly
are potentially really attractive everywhere in the world, mm-hmm. and a brain wallet works for ERC20 tokens too. Yep. So it's not specific to Bitcoin. It was funny. I just came back from Asia, and it was interesting just meeting with different folks, and I think there's a lot of passion for U.S. dollars, and U.S. dollar markets in Asian economies are really, really highly valued, mm-hmm. and U.S. dollar stablecoins are really, really attractive, all the way down to the individual as well as like the wealthy, right? Yeah. So, it's I think one thing that's a little bit unknown is, will we see surging growth in stablecoin, fiat stablecoin adoption, as effectively a way for people to protect and move value offshore, and it seems like that is a very real thing. And when you look at the sort of offshore capital markets, offshore currency, it's quite large mm-hmm. Globally, and stablecoins become, in some ways, even better than some of the alternatives.
Yeah, it's so interesting. Look. Being a citizen in the United States, many people working on technology being born in the United States, there's a lot of benefits to that, and then there's some disadvantages to it, right? You kind of come from a very Western-centric mindset, and one of the things that I've really tried to do is travel as much as I can, because you just get a different version of the world, right? Mm-hmm. And some you agree with, some you don't, and you end up somewhere in between, but the one thing that I see a lot of American-born entrepreneurs specifically miss is just how big the rest of the world is, right? Yeah. Like, there's only 330 million people, and yes, the United States has a lot of economic activity, et cetera. Yeah. But places like India or China are just, it's almost impossible to comprehend how much bigger they are than the U.S.
Sure. You look at like, Indonesia, I think is like 600 million people. You're like, what?
Crazy.
Yeah. And everyone there has a need for a price stable currency.
Mm-hmm. Absolutely.
Yeah. Yeah. The internet, this is one of the things that got me into crypto in the first place, which was, holy cow! Like if you can blow out how money is stored and moved globally and make it usable to the average smartphone user, it can be really radically transformative. And I think when you add this new layer of contracting and economic contracting that people who have these digital money can interact with, then it becomes incredible, because you can now basically start to reconstruct economic relationships all around the world, mm-hmm. Over the internet with fewer intermediaries. And that's the really, really transformative piece. It's not just about remittance or moving money around. It's about actually entering into economic relationships and being able to do that in a way where you don't have to take counterparty risk, where you can have the trustworthiness of the finality and security of a blockchain in an economic relationship, that's profound.
Mm-hmm. Absolutely. Before I wrap up, I always ask a couple of rapid fire questions.
Sure.
What do you think is the most important company in crypto? Can't say Circle.
The most important company in crypto. I think right now it's the Ethereum developer community.
Oh, interesting. Okay, explain.
Well, Ethereum right now has the most adoption as a blockchain platform that you can build apps on and smart contracts on. And the Ethereum developer community, not just the people developing the core of Ethereum, but the broader Ethereum developer community, to me are like the forefront of developing this new kind of crypto economy. There are really exciting new blockchain projects that are looking to compete with Ethereum, replace it, but no one has yet. And these kinds of platforms get built when you've got broad developer adoption and people contributing as well. So I think it's the most important because if the Ethereum community, both the core developers and the broader developer community, can get through their scaling kind of challenges, then it represents probably a really tremendous breakthrough for everybody.
Mm-hmm. Okay. What do you think is the one regulation that you would improve or change if you could?
I think what I'd like to see is clarity in major jurisdictions on the differences between kind of cryptocurrencies, crypto commodities, utility tokens, and security tokens. And so it's really the classification, and in particular with security tokens, I think it's very important that governments create definitions for how these can be launched and used without just taking the old capital market rules and applying them. I think that they need to figure out how to embrace the power of internet distribution, the power of open networks, the power of global investor bases. Like, that's what's powerful about this. Mm-hmm. And they have to embrace that if they want to enable the market benefits. If it's just we're going to try and jam this through the existing frameworks, I don't think it accomplishes much. Yeah. So it's sort of it's essentially like the classification of these different asset types and sort of the specific rules around them. That's the area I think needs, and we're seeing progress on that in a lot of markets, but that's the one that needs the most work.
Got it. What do you think is going to happen in the future? What's one thing that maybe other people aren't expecting or people aren't talking about as much as you think they should be?
Yeah, I mean, it's actually something we've been talking about for a long time, which is it seems really obvious to us that in the coming years that basically payments will go to zero, that the entire business model of payments will go to zero, that we'll be able to exchange payments with each other anywhere in the world instantly with no fees, whether it's between people or people and businesses, and that all the business models that exist around extracting a toll for receiving a payment, enabling a payment, et cetera, will basically go to zero. And that's really powerful because I think that has to do with sort of the movement of value in the global economy and what becomes possible. So that to me is significant. I don't put a specific year on it, mm-hmm. but it just strikes us as something that is inevitably going to happen.
And we see it. I think Venmo, right? There's no fees on Venmo, and there's applications that are trying it now. It's closed networks in terms of you have to have an account.
Sure, on the closed networks, Circle Pay is free as well.
Yeah, and so I think that is probably more likely than not to happen. Mm-hmm. As you said, the hardest part is when.
Right? Yeah, but I think in particular that will be built on interoperable crypto-based rails, right? Mm-hmm. So that any wallet can communicate to any other wallet, and it just works.
Yep.
That's what we see happening.
Yeah, makes sense. What's the most important book you've ever read?
The most important book I've ever read. To really think about that one.
Really? That's the one you want to think about?
Yeah. I've read a lot of books. Really interesting. I'll have to get back to you on that.
All right.
I don't want to give too quick of an answer. So
okay.
Save it
Just
for next time.
the one caveat I'll say is many people pick books that they feel like had a lot of influence on their life.
Yeah.
Right, as a proxy for importance. I asked one non-crypto question, and then you could ask me a question to end it. The non-crypto question is about aliens. Do you think that they exist or not?
Yes.
Yes. Why?
Sort of mathematical probability.
My guy. Yes. That's my whole argument.
Yeah.
It's just the math suggests that it would be near impossible for them not to exist.
Yeah.
All right. What one question do you have for me?
What are you most excited about that's happening right now in crypto?
Most excited about? There's a lot. I think part of it is we spend a lot of time with institutional investors, just in the nature of asset management. And there's still a lot of like, hey, is this even legal? What's a blockchain? Kind of very, what I'll just call elementary starting points.
101.
Which by the way, everyone starts there, right? So it's just their time. They're behind in the time, but they'll get ramped up quickly. But the thing that I see, I think taking hold as a narrative that's really exciting to me is the break from like decentralize the world, crypto, only, etc., and much more around here's products that are being built. Here's solutions to those types of problems. Here are how this fits into automation or integrates with other innovative technologies that you're already familiar with. Mm-hmm. And to me, that is a more macro conversation that one is easier for them to understand. Two is much more believable, I think, to them, right, when they don't understand all the nuances of the technology. But three, and the more important part is there's a higher likelihood in their mind that they are going to make money by investing in that stuff. Mm-hmm. And so what you see is you're seeing more sophisticated people come to the table, but it's not on, hey, there's this new utility token and we're going to go trade it and make a bunch of money. Right. It's much more kind of what you and I probably think are the sustainable narratives to get that community involved. Yeah. It'll take a while, but I think that is, for the long-term growth of the industry, really important.
That makes sense.
Cool. You want to throw a book out there?
No?
All right, that's fine. I really appreciate you taking so much time. We've talked for quite a bit, and I'm a huge fan of what you guys are doing. I think that
Thanks, Pom.
You are one of the first people that had what I call a crypto incumbent company that I talked with, and you really believed in everything's going to get tokenized or digitized, and you've been playing chess to kind of see that happen.
Definitely playing chess,
which I appreciate. So we'll have to do this again.
Absolutely. Look forward to it. Thank you.